Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly. You're here because you want the key insights. Fast. So let's dive in.
That's right. We've been looking at a stack of reports covering global markets and some really interesting trends emerging from South Korea.
And we've boiled it down to give you the crucial takeaways.
Exactly. Get you up to speed quickly.
Okay, so today we're hitting three main areas. First, some, let's say, concerning signals coming out of the U.S. economy. Second, this diverging path we're seeing in robotics innovation, China versus South Korea. It's quite a contrast.
It really is. And third.
And third, a growing split in the South Korean housing market. Big differences there.
Right. So our goal here is really to pull out the most critical bits and see what they might mean, looking ahead.
Let's jump right into the U.S. then. This triple weakness thing, Treasury bonds, the dollar, equities, all down together again. That's pretty rare, isn't it?
It is quite unusual, yeah. And the reports are pointing pretty clearly towards President Trump's latest tax cut proposals as the main trigger.
So it's sparking fears about the deficit and national debt.
Seems like it. Renewed fears, specifically. The market's reacting to the potential for, well, ballooning fiscal deficits.
And I guess the existing tariff situation isn't helping either. Inflationary pressures slowing momentum.
Exactly. Those are definitely contributing factors. They sort of add to the uncertainty, weigh on investor confidence. You see it reflected directly in the bond market.
How so?
Well, the 30-year Treasury yield saw a huge jump, 12 basis points, up to 5.09%.
Okay, and just to remind everyone, rising yields mean falling bond prices.
Precisely. It signals heavy selling pressure. Investors are moving out.
Got it. Okay, so some definite headwinds in the U.S. Let's shift focus now to Asia and this robotics story. China surging, South Korea lagging.
Yeah, that's the core divergence the analysis highlights. China's robotics industry is growing incredibly fast, becoming globally competitive.
Any specific examples?
Oh, yeah. Look at UB Tech Robotics. So they're a leader in humanoid robots. They're now partnering with Foxconn, the Apple supplier,
Right.
to test robots for actual iPhone assembly tasks. Part sorting, transport, gluing, quality checks, even packaging.
Now that's pretty advanced application.
It is. And it's not just them. You've got giants like Haitian Group in injection molding machines, Daly in machine tool and precision machinery. They're all pushing manufacturing forward.
And meanwhile, South Korea.
Well, the data shows a bit of a stall. Their share of leading global export items, it's barely budged.
Yeah.
Went from 4 items in 2008 to just 7 in 2023. That's just over 1% of global categories.
Minimal progress then. Why are they sort of stuck?
A big part of it seems to be their traditional export model. They've relied heavily on selling intermediate goods like components to China.
But China's now developing its own advanced manufacturing.
Exactly. So that model, selling parts to China, is becoming less and less sustainable. They need to innovate differently.
Makes sense. Okay, let's pivot one more time. South Korea's domestic scene real estate. You mentioned a divide.
Yes, a really widening gap. Apartment prices in Seoul, they're accelerating. Up 0.13% just in the third week of May.
And that's part of a trend.
It is. That's the 16th week in a row they've gone up. The pace is even picking up from the week before.
What's driving the demand in Seoul?
Seems to be a focus on what they call one smart unit, homes, desirable, modern places. Plus, there are high expectations for redevelopment projects, especially for high-end properties.
Okay, so Seoul is booming. But what about outside the capital?
Generally, regional prices are actually falling, down 0.04% in that same week, which is a slightly faster decline than the week before.
So a clear contrast. Any exceptions?
There is one interesting one, Seoul City. Apartment prices there actually rallied quite strongly, up 0.30%.
Why Sejong?
Well, there's speculation, or maybe hope, that it could become South Korea's new administrative or political center. So you see how specific local factors can really buck the trend.
Okay, so wrapping this up, we've got U.S. fiscal policy worries hitting global sentiment.
Yeah.
A technology race reshaping manufacturing between China and Korea. And within Korea, this stark internal divide in the housing market. They seem separate, but are they connected?
I think they are, absolutely. You see how global finance, technology shifts, and purely domestic economic forces all interact. U.S. policy affects investors everywhere. Tech changes who makes what. Local factors drive regional booms or busts. It's all interconnected.
So thinking about all these pieces together, it really makes you wonder, doesn't it? What kind of longer-term shifts in, say, global economic influence or even just regional development patterns might be starting to take shape right now?
That's the big question, isn't it? Definitely something to keep an eye on.
Food for thought indeed.
Thanks for diving deep with us today.